Welcome, my friends. Retail is in a state of turmoil in the United States. Walmart and Home Depot will kick off retail earnings season this week. These home improvement giants are considered to be among the strongest retailers. Industry watchers expect companies to strike a more cautious tone. Inflation is still lingering. Healthier profit margins could be a silver lining. But will costs come down? Rising food costs are pressuring consumers. People need to get more creative about where they go for groceries. Discount dollar stores are becoming a key destination for affordable essentials. That now includes perishable and non-perishable goods. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Retailers could face cost cuts and slower sales this year. After benefiting from a pandemic-era shopping spree, retailers are preparing for a reality check. Walmart and Home Depot will kick off retail earnings season Tuesday by sharing holiday quarter results. Other big-name retailers will follow, including big box players like Target and Best Buy, and mall staples like Macy's and Gap. The company's reports will come as recession fears cloud the year ahead. Americans are more worried about inflation now than they are about COVID. People are choosing to spend more on dining out, traveling and other services while cutting back on goods. Higher interest rates threaten the housing market. A slowdown in sales growth also seems likely after the sharp increases of the past 3 years. For investors, the end of retail's sugar high brings a mixed picture. Companies may share modest sales outlooks. Yet healthier profit margins could be a silver lining, as freight costs fall, and retailers have less excess merchandise to mark down. Plus, companies may have more cautious spending plans, such as smaller inventory orders and a slowdown in hiring. That could boost profit margins, even if consumers don't spend as freely. The world is focused on top-line momentum, said David Silverman, a retail analyst at Fitch Ratings. So many market participants are focused on what revenue is, said Silverman. But, he added, it's the operating profit that could bounce back nicely from a difficult 2022. Silverman said retailers' strategies have flipped from a year ago. Then, they bet on sky-high sales becoming the new normal and made riskier bets, from placing bigger orders to paying extra to expedite shipments. That hurt companies' margins, as unsold merchandise wound up on the clearance rack, and costs crept up, along with sales. Already, retailers have gotten a dose of reality. Big retailers have spoken about a more careful consumer. Walmart, Target, and Macy's. Several retailers already previewed holiday results. Macy's warned that holiday quarter sales would come in on the lighter side of its expectations. Nordstrom said weaker sales and more markdowns hurt its November and December results. Lululemon said its profit margins would be lower than anticipated. All apparel retailers are juggling excess inventory. Industry-wide holiday results fell below expectations. Sales in November and December grew 5.3% year-over-year to $936.3 billion. Below the major trade groups' prediction for growth of between 6% and 8% over the year prior. In early November, NRF had projected spending of between $942.6 billion and $960.4 billion. Retail leaders have looked closely for clues as they gear up for the coming earnings season. Macy's CEO Jeff Gennette noticed fewer holiday shoppers buying items for themselves while shopping for gifts. Lower purchases more than offset the good news that we were getting on gifting and occasion, said Gennette. Macy's credit card data showed weakness as well. Customers' balances on Macy's, Bloomingdale's and co-branded American Express credit cards are rising, Gennette added. More of those balances are getting carried to the next month rather than paid off, he also said. When we look at our credit portfolio, you've got a customer that's coming under more pressure, he said. Some retailers have already made some difficult moves to prepare for what could be a tough year. Luxury retailer Neiman Marcus and Saks.com. Stitch Fix laid off 20% of its corporate workforce. Wayfair laid off 10% of its global workforce. Amazon began cutting over 18,000 employees. Bed Bath & Beyond warned of a potential bankruptcy filing, and recently cut its workforce deeper. Bed Bath & Beyond Alco closed 150 of its stores. Target told Wall Street analysts that it would cut up to $3 billion in total costs. It did not provide specific details of the cost cuts. Target is set to report its fourth quarter results on February 28. Many retail leaders said they are planning cost-cutting measures for their workforces in 2023. Some retailers are hiring temporary workers rather than full-time employees. They are slowing raises or promotions and cutting benefits at their companies this year. Analyst Marie Driscoll said she expects companies to give other line items a closer look, like the free shipping and returns that we have all gotten used to, and digital marketing expenses. Interest rates are rising, and Wall Street is demanding growth in profits. Retailers are looking at their businesses and saying not every sale is worth having, Driscoll said. The fact that there is a real cost of money is changing the way that companies are looking at their business, Driscoll added. Yet there are some positive factors in today's economy. The tight labor market could give consumers the confidence to spend more. Consumers may decide to spend freely even as inflation remains hot. People are dressing up and buying fragrances as they go out again in the newly opened economy. Spending may have lifted January retail sales. More spending at bars and restaurants will also help. This earnings season will bring surprises, Driscoll said. It might show which companies can navigate the choppier waters. Nike, for instance, raised its outlook after topping Wall Street's expectations in December. A lot of it is dependent on their consumer and the strength of their brand, Driscoll said. There's strength out there, she added. With food price inflation, more shoppers turn to dollar stores for groceries. Sky-high grocery bills have been especially painful. Over the past year, food prices overall have risen more than 10%. Egg prices soared 60%. Butter is up more than 31%. And lettuce jumped 25%. Shoppers are looking for any, and all, ways to save. For some, that means shopping at their local dollar store. Dollar stores are pulling in more grocery shoppers. Slowly but surely, discount dollar stores' share of total grocery spending has been creeping up. Already, more than 1 in 5 consumers buy groceries at dollar stores. Dollar stores are the fastest growing food retailers. They are expanding quickly, especially in rural areas. Category giants have been adding stores and remodeling. Dollar General, Dollar Tree, and Family Dollar. They are adding more refrigeration units and expanded grocery offerings. More healthy foods and fresh produce are being added. If the two retailers continue to improve the quality of their fresh food while maintaining the low prices associated with their brands, there is a high chance it will bolster their value proposition with their existing consumer base and also pull in new customers from higher-priced retailers, said Wall Street analyst Julie Ramhold. These days, shoppers are considering alternatives, especially if it means better prices, Ramhold said. It's about making your dollar go a little further, Ramhold added. However, the value is not always there, she added. Despite the name, Ramhold said. You will be hard-pressed to find items that are just $1, she continued. Consumers typically compare with the offerings at other stores, like Walmart, Target, and Trader Joe's. Dollar store grocery assortment will still be smaller than at a supermarket or a warehouse club. For example, the selections are very limited. Less fruits and fresh items. Vegetables may be limited to more shelf-stable offerings, like bagged salad mixes and bananas. Dollar store shoppers are more likely to find items near the expiration date. Experts advise shoppers to focus on staples, such as rice, pasta, and dried beans. These items can be tailored to fit different cuisines and don't cost very much. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.